Hi, welcome again, everyone, to another business financial analysis video with myself, Moe Damin, and my colleague, Ted Wainman. Today, we are looking at Biome Technologies. So quick introduction into Biome Technologies. They essentially have two arms of the business. The first arm is Biome Plastics. So that is essentially bioplastics, and as they say, they're challenging the dominance of oil-based polymers. So in principle, a great thing. And the second arm of the business is called the Stenelco RF Technologies, or radio frequency technologies. So we're going to dive into the financial statement here. But before we do so, two things. First, don't forget to like, share, and subscribe, especially if you requested for us to analyze a particular company for you. You'll get notification of that, as this person did for Biome. So Hamia, hopefully I pronounced the name correctly. Here is your video. Share price we're going to dive into later on, so stick around for that. It had a massive peak and then a big drop, and it's kind of stayed at that low there. However, that's over the period since 1999, and we will kind of zoom in and look at the past year growth, which actually it's almost doubled. So worth looking at later on, so stick around for that. So let's dive straight in. Ted, what have we found for everyone here? And let's share with everyone.
Absolutely. So welcome, Moe. Good to see you. So yes, thank you very much indeed. Do remember that we are looking at the financial analysis. So this is by its very nature backward looking. So if any of our viewers would like to provide insight about the future prospects of the company, the deals in the pipeline, the opportunities, the size of the market, and why they think this is a buy, then they are more than welcome to share that with us. So if you are using this as part of your investment analysis, and I know that a lot of do like to use this, they are kind of on the investment side of the spectrum, then please remember that what we are looking at is, first of all, it is out of date. I get that, believe me, it is out of date, but it is a past look. So I kind of liken this a bit like it's like the service history of a second-hand car. You kind of need to kind of think about what you're going to be using the car for as well, but it does form part of your analysis, and it's also quite out of date because it's for the 31st December 2020, and we are right now at the end of October. So I get it, it is out of date. You don't have to put it in the comments, but if you do want to put it in the comments, I love to hear from everyone. Just please, I would ask if you could be polite. So we are going to look at the financial statements, and as you mentioned, there's lots of information about the company on these financial statements. They're available on the website. So if you are looking to invest in this company and you want to understand what they do a little bit more, find out who's on the board, what their management experience is, then this is the document that you want to be reading. However, do remember that this is generally speaking kind of best foot forward. So there's going to be a nice veneer over it as they present the figures in the way that they really want you to understand them. Here's the audit report, and then finally we get into the actual financial statements, and that's what we're going to be looking at. And of course you can see the remuneration of the board and where your hard-earned cash is going in terms of their hard-earned cash. So here we look at, here's the remuneration. So top line, first thing we notice is the sales. Sales are down. Okay, so this company has seen a drop in sales. We're in pounds, thousands, you'll notice, which means that the sales have dropped from 6.9, nearly 7 million pounds, down to 5.7 million pounds. So it's a pretty small company on 5.7 million pounds worth of turnover. I mean, really, in a listed sense, a really small company. And it's fallen. However, while the sales have fallen, oh dear, look what has happened here. The cost of sales have increased. Now we can go and have a look at note 10 and it'll tell you a little bit more about that. But, just as sort of the headline level, the gross margin for this organization has fallen from 43% down to 29%. Okay, now you expect the gross margin to stay constant all other things being equal. So clearly all other things are not equal. A drop in sales and a fall in the gross margin is not really adding up. A little bit further down, we've got the operating expenses. So these are the costs of running the business. And you'll notice that the costs of running the business exceed in both instances the gross profit, which means that they are making a loss from operations. Okay, so they are trading profitably, but they are operating at a loss. And for any business, you can't operate a loss forever because you will go bust. So this then starts to become a little bit of a play in terms of, can they turn the corner? Can they hit profitability before either A, they run out of cash, or B, the investors get bored of hearing the same old story and stop throwing money at this company. Finance charges, pretty small, suggesting they probably don't have any debt. This is probably related to finance leases. So, rather than buying their desks, they lease their desks, buying their computers, they lease their computers, and that's where the interest comes in there. And there's a positive tax because they're making a loss. They're managing to get some tax refunds. Okay, so not the healthiest profit and loss account for an organization. If we look at the statement of a financial position, this is the balance sheet. What we see is the non-current assets a little bit down from the previous year, probably suggesting that there's a little bit of investment going on, but the depreciation of the asset is greater than the investment. Again, that's not sort of a long-term sustainable picture. We see the current assets have also fallen a little bit. However, the current assets, when we compare the current assets to the current liabilities, liquidity doesn't seem to be a problem for these guys. So they're trading at a loss, but they've got and you can see here they've got quite a lot of cash sitting in the bank, less than last year, but they do have a reasonable amount of cash. So these guys are not kind of choking and spluttering and about to kind of fall over anytime soon. So the net assets is positive. They've got a nice positive balance sheet. However, it has fallen since last year because of that trading loss. Looking at the equity, we notice the equity. So you'll notice the share premium. So the equity, this is the investment by the shareholders, has increased during the year. So these guys have been raising funds. So part of their survival plan is to issue more shares in order to raise additional capital in order to invest in the business. Okay, so again, that's one of the reasons for companies like this listing. They'll list, they'll use those equity markets in order to fund the business up to ultimately to become the kind of the same size as Amazon or Apple, for example. That's their aim. Probably start off with a unicorn at $1 billion before they go for the trillion. Retained earnings, interesting enough, retained earnings is down, but the fact that it's positive means that this company has been profitable in the past. So it has a history of making profits. So it's not been loss making all the time. So if you look at Tesla's accounts, for example, you'll see a big negative retained loss effectively on their balance sheet because they started off, they made a loss, and now they started to make a profit. These guys have been making a profit, but are now making a loss. And obviously their challenge is to turn that back around and go back to making a profit again. This is just to notice that what we were looking at is the group balance sheet. They've also given me the company balance sheet. I'm not so interested in that because if you're a shareholder, you're a shareholder in the whole group. Movement in equity, not a lot going on in there. So there's no dividends being paid. There's no share buybacks. So I'm going to scoot over that to the cash flow. And here's the cash flow. Now, key here is net cash outflow from operations. Okay, this is a really, really key number. They are losing $1 million a year. Okay, a little bit down from last year, but they still have cash out. Okay, so the cash out now becomes a pretty important factor. And if we just scroll down to the bottom of the cash flow, let me clear the annotation and scroll down. So if we look at the bottom of the cash flow, we see they finished the year with 1.7 million in the bank. Their cash burn is 1 million, so they can, they're basically, they've got just over 1.5 years left before they run out of cash, and that is why they are issuing shares in order to fund the business. So the financing activities, this is where we see issue of shares, buyback of shares, issue of debt, buyback of debt, for example, or taking out loan, repaying a loan. What we see here is that they are issuing shares, and then we've got the costs. So these are the bankers' fees of issuing those shares. So quite an expensive share issue, and they are raising additional money. So they're quite dependent. The auditor's report will say they're a going concern because they got enough cash to trade for 12 months. So that's not a problem. However, these guys are dependent on their ability to go back to the market and to keep raising capital in order to pay for the in order to kind of keep financing their activity. So if the market say no, I'm not interested, then these guys will fall over pretty quickly. And obviously, if the market is interested and will continue to finance these guys, then if you are an existing shareholder, then you will be diluted. They're probably doing a rights issue, which means that you will be asked to put your hard-earned cash after the last investment, but it is it is going to be costing you either in dilution or in additional cash if you believe this company. So that's just a kind of caveat if you are looking at this company from an investor's point of view. If you're looking at them from a supplier's point of view, that they look like they will pay their bills, but it's just to be aware that this is not the kind of the healthiest company in the world. They can look at their liquidity isn't an issue. It looks to me like they pay their bills in 45 days, so they're pretty good payers in terms of accounts payable, accounts receivable a little bit longer. So they do have a little bit of working capital strain, but they've got easily enough working capital in the business, so it's not causing them any problems at all. I just thought it might be worth actually, just if we go back to our income statement, it's probably worth just having a little look at that note 10, the revenue number 2, and the cost of goods sold. You remember this note 10 here? I think this is kind of a key driver of the business. You'll notice that they really are, they're very, very low in terms of their gross profit and that fall in the gross profit margin. So here's our note 10. Note 10 is really giving us information about the inventories rather than the cost of sales, and it relates to the cost of the goods sold, and you'll notice there's no real kind of additional information in the accounts regarding the cost of sales. So there's no clues here as to why that gross margin has fallen. However, when I look at this, 43% down to 29%, that is a very, very big fall for an organization. So there's the financials. So what's our conclusion? They've got cash. They're going to hang around. They'll be around next year, probably the year after. But it's an uncertain future. They really need to start trading profitably. They really need to start generating cash from the trading operations, or they will be very dependent on the goodwill or the buy-in of their suppliers, their equity suppliers, their shareholders, to carry on backing the business. So here is the organization. And I don't know the history of these guys at all, but you can see in 2006 something happened, and suddenly these guys were definitely the ones to buy into. So I'm hoping that we don't have any viewers who bought in right up here, because if you bought in there, basically you've lost everything. But will they go back again? Well, I think that looking at the company from this perspective is probably not really very helpful. So let's zoom in on the last year. So here's the last year. So interesting enough, in the last year, quite a big positive. Now remember, we've been looking at the 2020, and the 2020 is effectively from this bit looking backwards. Okay, So what we've been doing is looking backwards. You as if you're an investor in this company, you're going to be looking forwards, and it looks to me like, you know, there's a kind of there's a story that they're telling the market, and that story is starting to take fruition. So maybe, I guess, from a financial analysis point of view, I'd be quite interested to revisit this business in you know, in when they produce their 2021 accounts, and see, you know, is that sort of turnaround reflected in the numbers? Are they starting to make a profit? Are they generating cash? Is this company kind of you know, starting to bear fruition? You know, as you mentioned, this is a pretty exciting a part of you know, the business, especially with, you know, COP26 on the horizon. But you know, in terms of the market cap, it's only a 15 million pound company. It's a pretty small company. The net assets, if you remember, were about 3.9 million. So there's, you know, there's a reasonable amount of goodwill. It's 276 times, sorry, 276% premium to its net asset value. I'm not sure that necessarily gives us any kind of real insight. 3 times sales. So it's not an expensive company. I think that, you know, if you're investing in this company, you're investing in the story. It's not a complete basket case from a financial perspective, but it's not the strongest balance sheet, because they will, I think, have to go back and raise more capital, but I may be wrong.
Yeah, interesting one. And you know, anyone that's knowledgeable in the bioplastics industry or in the radio frequency technologies industry, we'd love to hear from you and hear your thoughts on there. So do leave a note in the comment section, and as always, like, share, subscribe. If you have a company that you would love for us to analyze, whether you are thinking about investing in them and you want to look at our analysis on their finances, or if you're thinking about selling to that particular company, and you want us to give you some insights in there, then do leave a note and request in the comment section below. So until the next video, thank you, everyone. Thank you, Ted.
Okay, good to see you, Moe. Catch you later.